Hey everybody, Chuck Barone here. It is Thursday, October the 26th, 2023. Nice to be back today. We got a little bit to talk about. We got some numbers today we were expecting. We knew this market would react. Not a surprise the way things are turning out. But before I get rolling, of course, let me take a second. Welcome everybody to the show. And as always, thank you guys for your support. You guys turning up and watching these shows, watching these videos, keeps us rolling here. We appreciate you guys. All right, so let's talk about these markets today. What a crazy day, guys. You know, we knew we were going to get this GDP number today. Atlanta GDP Now tracker said 4.5. There were estimates as high as 5.7. GDP comes in 4.9% third quarter GDP. We knew we were getting jobless claims today. They were expecting a little over 200,000. They got 210,000. Still a very low number, although we've been getting under 200,000, so that's a little bit of relief for the Fed. But all this good news, bad news for the stock market, bad news for the bond market. Where do you see these numbers today, guys? Check this out. Stocks down across the board. Thinking this interest rate scenario, the way they've been fantasizing about it, I guess is the best word. Now reality again. They don't want to deal with what is, and they're going to be forced to sooner or later. So this market reacting down pretty dramatically today. The Dow falling 251 points, 32,784. The NASDAQ falls 225 points, 12,595. NASDAQ was just at 14,000. S&P down 49 points. That's the broader market. That's a big number down. 4,137 on the S&P. So stocks down across the board. Nothing spared today. Although I guess Amazon, after the market closed today, their earnings numbers came in. Their revenue's up pretty handsomely. We'll see if that buoys any kind of rally in the market tomorrow. The bond market, another weird day. Man, this bond market totally dysfunctional. Might be the biggest crisis in the bond market since JP Morgan was alive. Crazy, crazy times, man. So the 10-year today jumps 10 basis points. 10-year jumps 10. 4.85%. We're going to see the 10-year up and over 5% for sure. The 2-year now sitting at 5.04. That's falling 8 basis points today. So now the inversion is now really narrowing. Now it's down to 19 basis points. So the yield curve flattening out. Longer term rates rising much faster now than short term rates, which this just tells us this is getting out of the control of the Fed now, because they only control overnight rates. They try to influence the rest of these, but I'm sure this is not the result they're looking for. So the bond market dysfunction continuing. Bad news. The dollar today, man, not much today. Up 6 bips is all. 106.65 on the index. Still the strongest currency out there, especially in the basket it competes against. The dollar with higher rates expected to be and longer, going to strengthen the dollar. Metals today, well, mixed results today. Gold rallies up $5.10, sitting at $1,984.70 for an ounce of gold. Silver falls 9 cents, $22.77 for an ounce of silver. I think that these prices. I got nailed a little bit the other day in the commentary about my comment about I think gold and silver are pretty fairly priced right now. A lot of people think silver should be significantly higher. I do too. It's kind of been batted around. You would think that the ratio between gold and silver would kind of narrow a little bit. It hasn't. But I still think it's, I would like to buy some silver. Next time I get a fat check, I think I'm going to have to go buy me some ounces of silver. I think, $25 is a target right away. And then after that, we'll see where the market goes. I think that you're going to get a 10% pop at $25 right now. Depending on the juice you're paying in and out, that would not be a bad little play. So gold and silver holding steady in the face of even this obnoxiously strong dollar. Oil today continuing to come down. I guess it must have rallied up a little bit yesterday because it looked pretty much like the same price it had on Tuesday when I was last here. Oil falling $1.76 today, $83.63 for a barrel of West Texas Intermediate. I think oil wants to come down. I think the uncertainty over this Middle East thing, the idea that it could spread, get bigger, affect, oil in and out of the Gulf, the shipments or the production of it itself. So there's that pressure on the market. I think the market is understanding that the demand probably is not going to be as robust as they thought. And if the Saudis and the Russians step back up their normal production, oil's going to spike down pretty good. Still think the trend is down, but with the uncertainty over the oil or over the Middle East with the war there now, you have the uncertainty that makes it a little harder to trade. Bitcoin today down 656, sitting at 34,126, a strong number for Bitcoin. A lot of people feel like this is just the beginning of the next big leg up for Bitcoin. Honestly, I just don't know enough about Bitcoin, whether that's true or not. I think the people who are believers are happy right now. It was a pretty big jump from 26 to 34. The people getting in recently are probably sitting on profits. The longer term people who've been holding on, waiting for it to come back, probably not quite as happy as the newer people in. All right, so let's talk about news today. News we need to hear about. GDP, 4.9%. Who believes that? They said consumers were 70% of that growth. Jobless claims, as I mentioned, coming in at 210,000. Guys, how long do you think the consumer can carry this economy for us? These buyers are broke, loaded up with super high interest debt, and now they're expected to carry 70% of the economy. So the rich can continue to hoard up all their profits, and working people stay on that debt treadmill that I've warned all of you guys about so many, many times. I don't know how long consumers are going to be able to do this. I gotta say, I don't like the feel of it. It feels like one of those, something bad is literally, it's in the air. You can almost see it. You just don't know exactly where it's going to come from yet. And I gotta tell you guys, that's the way I feel right now. This foreboding, this, waiting for the other shoe to drop, so to speak, right? I don't know about you guys, but I personally have been a lot more selective about the way I'm spending my money and what I buy. I literally get mad, get pissed off when I see some of the prices, some of the stuff, what people are charging these days, man. It's just out of line, man. It's not bad enough at the gas pump in the grocery store where you see this stuff, but like even some of my favorite restaurants, I'm not much of a fast food guy, but I'm a chicken finger guy. And my favorite chicken finger place, when I first started going there, they first opened here in my neighborhood, in Henderson, their lunch was $7.99. The last time I ordered that very same lunch was $17.99. Now, I understand prices are up a little bit, okay? But I buy chicken, and prices of chicken are not up 100%. They're not. Neither are price of French fries, okay? So I'm not going there again. I'm done now, right? And I've been doing that. Like, literally, the prices are just stupid, and I refuse. I have enough respect for my money. I work hard for it, man. I'm sure you do too. Where I'm not just going to spend money and overpay for everyday stuff. I'm just not going to do that if I can possibly help it. So now, we're seeing these numbers telling us the economy booming, booming, booming. Does it really feel like that to you guys? You feel like, I guess the consensus is I'm doing fine, but everything else around me feels like crap. I'm personally okay, but I got to tell you, man, this real estate market we're in right now does not feel like the economy is booming. I was reading today, they said real estate sales are right now, today, as slow as they were in 2008. Slow as I can ever remember it. A friend of mine has 106 agents at the company he works for. They have 3 deals under contract. This is the reality of things, guys. Okay? So how can we have an economy growing at 5% when real estate is completely in the shitter? And we all know, we've been talked about it a lot on the show, what's coming and what's happening right now with commercial real estate. Big problems. A lot of the stuff massively overvalued. Caught on the wrong side of a trend. This work from home thing is not going to go away. So office buildings not having the demand or the cachet they once did, coming down in value, and now you got this rate with the higher rates and $1 trillion worth of commercial real estate needing to be refinanced. And it's going to be refinanced at these higher rates, so we know it's coming there. Residential is a little bit different kind of problem because we have high rates at the same time as we have high prices. And because the rates are so high and so many people are locked into low interest rate mortgages, they refuse to sell their houses. And I wouldn't either. I'm not selling mine. So now there's no inventory to buy. So the people that want to buy houses are driving prices higher. So you're having prices go up in a recession. It's crazy. Because it is a recession in real estate. Believe that. So what's going to happen now is down the road, whenever the Fed decides to turn their policy around and bring rates back down a little bit, there's going to be a frenzy of pent-up demand for houses and real estate, and it's just going to push prices even higher. So now the gains you were hoping to get from rates coming down, we're going to get sucked right up. And now I guess get ready, guys, because it's looking to me like $2,500 a month is going to be the new normal for mortgage payments. And that's something I'm going to have to wrap my head around because I got to tell you, it's going to be difficult for me to recommend in good conscience that that's a great idea for my clients. So crazy, crazy times coming. I don't buy this hot economy bullshit. I think that, I was reading today, so the consumers, listen to this. 2022, U.S. consumers paid $105 billion in credit card interest. Credit card interest. $30 billion just in the fourth quarter of last year. We know now debt levels are higher. We know interest rates are higher. So that number we're going to eclipse that number in 2023 for sure. So where's the money to keep this shopping spree going to come from? It's just not going to happen, and that's what's going to happen. So we got a very difficult spot for Powell, very difficult spot for the Federal Reserve. The economy refuses to slow down according to their plan. So now what? What do? The market has priced in a 0% chance of a rate hike next week. Well, I say right now, if they're going to pass again on a hike next week in the face of the data we're seeing here, then I would say we can reasonably conclude that this cycle of rate hikes is over. And the only reason they would get back into hiking is to start a new cycle higher if something, really bad happened on the inflation front. So we'll see. We'll see, guys. It's just, I got to say, the weirdest times I've ever seen in these markets, and I've been watching them probably since about 1985. Crazy. Anyway, I'm out tomorrow. I got a conference I have to go to in Arizona. I will be back on Monday, and next week I got nothing, so I'll be here every day for you guys. Everybody go forth and have an awesome weekend. We got the Bills at the Buccaneers tonight. We're going to win. We need a win bad. Good weekend, everybody. Take care, and we'll see you guys on Monday. Thanks.